Are you saying that I should only invest in gold? I mean, come on. Gold isn't something you want to be an overweight buyer when it approaches 4,000. It's been done to death. They want to treat Bitcoin and gold as two distinct assets. Yes, they're in the same risk-off bucket. Perhaps you should wait for a dip around 3,500. Bitcoin, thus, is not a risk-free investment unless you anticipate a sudden shift in value. Yet, given the many interconnections between Bitcoin and other assets, we can all agree that this has been the case with the exception of the Silicon Valley Bank collapse. Yeah, the global financial system is showing stress points that few can ignore. Gold's push toward $4,000 signals both confidence in hard assets and deep concern over the stability of fiat currencies. The metal continues to prove itself as the anchor in an environment where fiscal excess, ballooning debt, and relentless government spending are undermining the very idea of risk-free assets. Meanwhile, Bitcoin's role is still debated. Some see it moving into the risk-off camp, but its trading behavior remains aligned with risk on assets, except during isolated crises such as the collapse of Silicon Valley Bank. This divergence underscores how investors are recalibrating their views on safe havens in real time. Mike McClone, senior commodity strategist at Bloomberg Intelligence, highlights how gold's rise reflects a structural rejection of fiat dilution. At the same time, James Lavish, an investor and macro analyst, notes to evolving perception of Bitcoin among institutions, where its eventual inclusion alongside gold as a strategic hedge appears increasingly likely. Both agree that quiet, underreported central bank gold buying and relentless Bitcoin hash rate growth signal accumulation happening beneath the surface. Gold's surge is a visible reaction to unsustainable policies, while Bitcoin's gradual institutional acceptance could reshape portfolio construction in the years ahead. Together, they demonstrate that the foundation of wealth preservation is shifting, and investors who ignore this dynamic risk are being left behind. Now we present the clips from their interview before we continue to discuss this. Please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video. Good morning. There has been some emergence of Anna Wong. Optimistic. For non-farm payroll, first things first. While she did not specify a percentage, she did state that she expects 54,000. The range is wide, ranging from 20,000 to 100,000. She attributed the lack of hiring at large companies to a productivity cleansing, as she put it, and that many small businesses are experiencing the same problem. A non-farm sector that she anticipates will demonstrate improvement in hiring is leisure and hospitality. This is something she has been mentioning for some time, and she also believes that the worst may be behind us in terms of the US economy, as trade uncertainty and fiscal restraints may begin to transform into opportunities. Our more senior colleague, financial ethics expert F. Ira Jersey, argues that markets will remain range-bound for the foreseeable future. However, if you look at the headboards, you can see that they are lower in the region of 4 to 10%. Quote, not much new from our equity strategist. From our FX strategy, Audrey Childe-Freeman, we learn that she is still pessimistic about the dollar and has scaled back her predictions for its growth. I want to bring your attention to the fact that when I wake up in the morning, gold is up nearly 2%, crude oil is down nearly 2%, and we're heading towards the 40 level, a level I've been hammering on for far too long, which is quite unsettling. Clearly, the shutdown is a factor in this, and when I look at gold, I see significant resistance around 4,000. There should be some response sellers, and the old resistance, and I believe it will print there. I'm observing the 3,500 support level, and am unsure of what could cause it to fall below that. Additionally, I wanted to mention that various ratios are becoming increasingly unsettling, such as the gold to crude oil ratio, which has never finished a year above 39. The last time this happened was in 2020, when the gold to Bitcoin ratio dropped to 29. Now it's heading towards the lower end of the range, around 25, and it would be far more comfortable to do that ratio on 25 instead of 35, the all-time high. I should also mention that the trends for crude oil and grains are all very similar, and that low price cure is holding them all together. Oh, and I almost forgot to mention that copper is the key commodity that will determine how to go up and second in fourth quarter. It's currently up about 19% for the year, while the SP 500 is up about 15%. It appears to be riding high on the back of the SS 500 at the moment. The Federal Reserve meeting is scheduled for October 29th. In the meantime, I'm just going over the Bloomberg list of economic indicators. You have ISM this week. Jobless claims are on your record. There are non-farm payrolls, and that's about it. You've got more jobless claims, obviously. You get the University of Michigan garbage, but you've got CPI, PPI, all coming in before this next Fed meeting and coming in early enough, So you've got the CPI and PPI coming in next week. So it gives them plenty of time to receive that, actually digest it. If they're going to get it, which are important numbers that they're going to be looking for. They're really, they're on edge about inflation, meaning they're concerned that if they continue, the Fed continues to lower rates just to make sure that we don't spike the jobless claims, then you're going to possibly fuel the fire of inflation. And so that's kind of a worry here. So what's going on? The dollar is falling and gold is rising. It's no wonder gold is smelling the utter illusion of fiat currencies and the endless, ridiculous spending from governments. We can only hope that they'll finally come to an agreement. Spending will increase regardless of whether we succeed in our campaign against illegal immigration or not. The decision to pay for their health care will rest with the President and Congress. There's no doubt about that. And Mike, you might have a better idea. According to what I read this week, the International Monetary Fund estimates that 22% of all gold purchases are not being reported, which is like sneaking into Swiss vaults without anyone knowing. It's hard to pin down, but if you look at the gold price, it's obvious. So, if you want to know what's going on and why central banks aren't announcing that they're buying Bitcoin, you should look at the price of gold if they announce that they're buying Bitcoin. In your opinion, how would the Bitcoin price change in this scenario? That is something Dave says frequently. Yeah, you'd outrun yourself if you ever felt on your own. Whose job would it be then? Its hash rate will rise as a result of mining. There seems to be no end in sight to the exponential growth of the hash rate. You can amass Bitcoin incognito at a slower rate, but without drawing attention to yourself, because the price is staying the same while the hash rate keeps increasing. Yes, they will treat Bitcoin and gold as two distinct assets, each with its own level of risk. In other words, unless you count the Silicon Valley bank crash as an exception, Bitcoin is not a risk-free investment. Rather, it is an asset with the potential for loss due to its high correlations and other inherent uncertainties. You probably aren't paying attention to what the fuck is happening in Washington, but it was a risk-off asset. Who knows what the future holds, though? We don't know if a black swan or another catastrophic financial event will hit the United States. When the general public of investors finally gets it, then you can start allocating little amounts. It won't happen overnight. Some managers will think it's risky, and then more and more managers will come to the same conclusion, what Scott said, that it's all about changing your perspective. Bitcoin, though, will remain unchanged regardless of how people perceive it. It's going to stay the same and grow organically. It's not going to change just because someone announces they're going to buy Bitcoin. What happens when a hedge fund says, we're allocating Bitcoin because we believe it's a long-term strategic asset to protect against the debasement of the dollar? That's a big deal. And it will happen at some point. I understand your perspective on the future, but predicting the future as a fact is risky, especially if they add Bitcoin. They've been saying that for forever. You can't hold gold email with some Bitcoin in that space. But at some point, it gets too extreme. That's my point at the beginning of the year. They've been kind of thrown off the horse a little bit, still sticking with this year being potential, of more of a risk. As a risk-off year, haven't been right there yet, but gold keeps outperforming, even though we're going up. There's something going wrong here. Either gold backs up 10-20%, or it gets legitimized by the end year by the stock market dropping, which means then we start getting the cryptos to lead the way. Okay? But we have to talk about, we can't just end it at, January 1st, that we had a major tectonic shift in policy when Trump was elected. You had an administration that was nothing but antagonistic to the whole space. The Trump administration one is one of those choke point 2.0 was real. Remember? Trump administration. One did the same thing. Just like they're pushing back on some of